Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. So today what we get to explore is Zillow's April housing market breakdown. And you guys, there's some really intriguing information in that report because their information is a little bit different than CoreLogic or Redfin. So I still think it's important at least to follow what Zillow is saying with their data, although I don't always trust them, but it's going to be really interesting to dive into that, guys, to see where the trends are headed. But not only that, we get to see what Zillow has done as far as lowering their projections once again. So far it's been every month they've lowered their projections of equity growth around 3%. So it's, in essence, you guys, they're running out of months to continue to lower their projections. They still think equity is going to grow well into 2023, which is completely crazy in my opinion. But we're going to read this article. The title of this article is "The Housing Market is as Competitive as Ever Despite Soaring Costs." Now I'm going to read some of these key points here. And I want you guys to also notice, even though they continuously are lowering their projections, we have all these trends pointing into a shift into a buyer's market. They are still talking hawkish. Zillow's still talking hawkish. Despite the hundreds of millions of dollars they lost, they're still talking hawkish, as competitive as ever. Right? Is it as competitive as ever? I don't think so. But anyways, let's read a couple points. U.S. home values continue to grow at a record pace, up 2.9% in the past year. So they're still holding on to that year over year, you guys. And, within the last year, obviously equity grew to record paces in 2021. That doesn't mean that's going to happen in 2022 for obvious reasons. Here's what's really interesting. Look at this. The combination of rising prices and a spike in mortgage rates means the monthly mortgage payment on a typical home is 52.5% higher than a year. That is insanity at its finest, 52.5%. Obviously, the market's going to shift the other direction. Last point was rising costs have not yet eased competition. That's a joke. I mean, it's clearly showing. Redfin has a home buying index. It's down. Home buying competition's down. Bidding wars are down, but yet it has not yet eased competition. Anyway, Zillow, homes are selling as fast as they ever have after only 7 days for the typical home. And nearly half of the homes are selling for above their list price. So again, guys, this is the April data. So a lot of this stuff is lagging behind, right? But anyways, that's what Zillow has been saying. They continue to be hawkish, as you guys can see that. Now, remember, you guys, I'm not your financial advisor. I'm not your realtor. I'm not your loan officer. I'm just a YouTuber sharing with you my thoughts. Even though in Texas, I am a loan officer, Houston, a realtor. I'm an instructor and teacher as well, as far as real estate education. So if you guys can, just remember that, all right? And also, please, for the YouTube algorithm, please like this video, subscribe to my channel if you haven't already. And as always, please comment, you guys. I really respect your guys' comments, especially those of you who actually have some really good intel and actually some really good points. I see you guys. Let's continue into this article right now. And those of you who are with me in my early days of doing these vlogs, which I've only been doing these vlogs kind of full time, less than 3 months. So I really appreciate all the growth. I really appreciate all the love. I'm trying to do the best I can to just share my knowledge and not be so kooky about it. So here's the article. Year over year, home value set a record for the 13th consecutive month in April. The typical U.S. home is worth $344,000, 20.9 higher than a year ago. The record pace of growth comes despite rising mortgage rates, eating away at what home buyers can afford. The monthly mortgage payment on the typical U.S. home is 11.7 higher than it would have been in March. You guys, so in 1 month, right? That's insane. In 1 month, the mortgage payments have gone up 11.7% in 1 month. That is a rug pull if I've ever seen one. And 52.5% higher than a year ago, assuming a 30-year fixed rate assuming a 30-year mortgage with a 20% down payment. You guys, think about the unaffordability that's just spreading across the housing market. Why the Federal Reserve said we're going to put a stop to inflation. We're going to rug pull you, right? I mean, that's what they're doing. Everyone sees that. Even in the stock market, you guys. Let's continue. Home values continue to grow fastest in the Sun Belt. Austin up 37.6%. I'm scared, Austin. Raleigh up 36.4%. Tampa 35%. Las Vegas. How is Las Vegas in here again? Las Vegas suffered so bad in 08. I can't believe it's up here again at 33%. Nashville up 32%. Are the 5 hottest markets in terms of annual home growth. The coolest large markets are Washington up 11%. Baltimore 11, Milwaukee, 12%. So you guys pay close attention to those cities, and because those are going to be the cities that have the biggest bubble, that are usually the most overpriced. So if you can avoid those cities, do it. And I've been watching a lot Austin, and I'm really especially worried about Austin, especially when we go into recession. We're probably already in it right now because of tech jobs, right? Austin became the new Silicon Valley. It's like a mini Southern California. So if a recession hits, layoffs hit, Austin's going to get hit hard. It's going to get hit super hard. National average of equity increase is still over 30%, but these are even over that. And that it's over 30% over 2 years. This is year over year, right? That's absolutely incredible. And think about the 52% higher mortgage. Think about the 11%. So if you were pre-qualified in March and you close in April, probably your mortgage is going to be 11% higher than when you set out to purchase a house. Do you guys see why I keep telling people just let the dust settle, let the rising rates do their job before you go back into the market right now? You go back into the market right now, triple whammy: runaway inflation, high surging mortgage rates, and the worst thing is overpriced, drastically overpriced houses. It's a triple whammy. Let it subside a little bit, right? If you can, right? There's different reasons to buy. If you want to hold for 10 years, 15 years, fine. Do what you got to do. But I'm saying most people aren't like that. Anyways, let's continue on with this article. I like the title of this paragraph: Early Signs of a More Balanced Market Ahead. Faint signs. You see how hawkish these guys are? They're just going to put faint, okay? Whatever. Even though they're 2-year records, right? There's 2-year records of these trends, all-time lows, all-time highs, right? They're still saying faint signs. So let's just continue. Faint signs are starting to emerge that a more balanced market is around the corner. The share of listings with a price cut crept up to 9.1%, higher than 8.6 in March and 7.8 last April. That may be a sign that sellers cannot be quite as ambitious in their pricing strategy as they could have been in recent months, giving a small glimmer of hope to buyers who are struggling to find opportunities in this market. Inventory continues to rise as well, up 5.5% in March. So inventory is up 5.5% in March, the second straight month of growth. The year-over-year inventory deficit has also shrunk in each of the past 3 months, now sitting at 19.5%. Do you guys see the direction of the trends? You guys see that? More inventory is both the consequence and the cause of a more balanced housing market. Because there is more to choose from, it limits the number of buyers bidding on each home and prompts sellers to price their homes competitively. Okay. That's really, really super good news. So according to Zillow, right? Redfin's different. According to Zillow, 9.1% of homes have already done price cuts, right? Inventory is up 5.5%. So do you see, you guys, how quickly this is happening? And this report is lagging behind. We're well into May already. They're talking about April. So do you guys see, you guys see how quickly this happens? Now, the moment that we start having negative equity growth, it's going to be an implosion, right? When we get to that point, negative equity growth, and we can visibly see that across the nation, it's going to be all of these trends, all of the direction of these trends, including foreclosures, is going to skyrocket, right? It's going to come crumbling down. Like I said, it was built quickly. It's going to fall quickly. It's just how the foundation was built. The foundation is completely weak in this housing market. Let's continue with the read. Okay, guys, so let's look at the flip-flopping. So remember, I said Zillow was flip-flopping. Remember, the beginning of the year, Zillow said the forecast is 17%. Then last month, they cut that to 14%. Now look at what they're saying. Zillow's home value forecast now calls for 11.6% growth through April 2023. So they keep slashing their growth about 3% each month. So they don't have many months before they can't do that anymore. I give them about 4 months before they start saying, oh, we made a mistake. But let's continue reading this, okay? So Zillow's home value forecast now calls for 11.6% growth through April 2023, down from a year ahead forecast of 14.9% made in March. So that's over 3% drop. Zillow's forecast for existing homes has been lowered as well, now predicting 5.73 million sales in 2022. That would mark a 6.4 decrease from 2021. Spiking mortgage rates, inventory gains, and lower than expected pending home sales and mortgage applications data drove the downward revision, and those trends are going to continue. These downward revised projections would still represent a very strong housing market in the coming year. Other than Other than this recent run of record-breaking home value growth, only during a short stretch in 2005 have we seen home values grow faster than 11.6 annually in the history of Zillow's home value index. I think that just means we don't know what to do here because they've grew too much. I don't know what they're saying by saying that. And while 5.73 million existing home sales would be a decrease from a remarkably strong 2021, that would mark the second best calendar year total since 2006. The only problem with that, guys, is 2022 has not concluded, so they don't know if it's going to be a record year, right? And sales and sales are already down. So, in their own words, right, we haven't had this type of growth since 2005. Almost in Zillow's own words, we're in a historical housing market bubble right now. So, I would really appreciate, one of the top real estate research companies in the entire United States. I really wish they would talk more about a bubble and how to prepare for it, right? Like I'm trying to do on these videos, right? I'm not trying to scare people. I'm saying, how do we prepare for this, right? How do we prepare for this? Well, we sit out a little bit. We let the dust settle. We work on our credit. We get out of consumer debt. We rebudget. We save more money. We get another source of income. Do you guys see how we don't have to be helpless? Do you see that by understanding these trends and by understanding this data that you can actually become a winner as long as you project your life in the right direction? So, you see what I'm saying? But not only that, you guys can help other people that are absolutely taken away by their emotions in this housing market. Do y'all see that? I've lost big in the housing market. If you haven't lost big, if you didn't lose big in 2008 or any of the other previous crashes, then you don't know as much how it feels, how to be a consumer and how to go into foreclosure. So essentially, I went into foreclosure in 2008. So instead of the next 10 years after 2008, instead of me being able to invest in real estate and create an empire and a legacy for my family, I drug myself out of the gutter and I slowly worked my way back to having good credit again. That took 10 years, right? Took 10 years. So all I'm saying, you guys, is when you're making a decision to buy and purchase real estate, make sure you're making a wise decision and make sure the decision is yours and not someone else's. Okay. But anyways, you guys, really interesting data, how Zillow is different than Redfin. Now, obviously, Zillow is going to continue to flip flop. We're already seeing them flip flop, flip flop, flip flop. So we're going to continue that. Don't forget that Zillow is taking a hawkish approach to all of this. When we really need a more bearish approach, we really need a little bit more guidance on what to do. But it is what it is. Now, obviously, I really appreciate you guys following along with me on this video. And I definitely wish you luck if you're out there investing in real estate. And obviously, I hope you win.